Hey, what's up everybody? In this video, I'm talking about retirement plan contribution limits for 2021. I'm Matthew Jackson here from 401k Maneuver, and our whole goal is to supercharge your 401k account performance. Be sure to check out our 401k calculator to see how much professional account management might help your 401k balance in the future by going to 401kmaneuver.com and visiting the 401k calculator. If you're new here, be sure to hit the subscribe button, and the links to everything that I mentioned in this video you can find in the description box below. So let's jump right in. You know, the IRS recently announced retirement plan contribution limits for 2021. And while most limits remain the same as 2020, some plans will see a limit increase. So keep watching to find out exactly how much you can contribute for 2021 and start making plans now to do what you can to max out your retirement savings next year. So let's talk about 401k retirement plan contribution limits for 2021. Employee 401k contribution limits for 2021 will stay the same as 2020 at $19,500. This applies to 401ks, 403bs, most 457 plans, and the federal government's Thrift Savings Plan. For those age 50 and older, the 401k catch-up contribution is $6,500. If you're 50 or older and need to catch up on your 401k retirement savings, the amount you're able to save remains unchanged at $26,000. If you turn 50 anytime during December of 2021, you're still eligible to contribute the additional $6,500. Let's talk about after-tax 401k contributions. If you're self-employed or your employer allows for after-tax contributions, the overall defined contribution plan limit will increase to $58,000 for 2021, up from $57,000 last year in 2020. The $58,000 is a cap of the maximum $19,500 contribution limit deferral plus employer contributions. Let's move on to solo 401ks. If you have a solo 401k, otherwise known as a self-employed 401k or individual 401k, the contribution limits will increase to $58,000 in 2021, up from $57,000 in 2020. How about IRA retirement plan contribution limits for 2021? Let's talk about IRAs. Individual retirement account contribution limits stay the same for 2021 with a $6,000 maximum contribution limit. This applies to pre-tax or Roth IRAs as well. The catch-up contribution for people age 50 and over remains the same, additional $1,000. Here's an expert tip. You can contribute the maximum for 2020 until April 15th of 2021. If you have an IRA, plan now to maximize the contribution limit for 2020 before April of next year. How about SEP IRAs? Contribution limits for SEPs or simplified employee pensions will go up $1,000 from $57,000 in 2020 to $58,000 in 2021. How about simple IRAs? Contribution limits will remain the same in 2021 for simple retirement plans. The maximum contribution limit right now, $13,500, and the catch-up limit is $3,000. Let's move on to deductible IRA phase-outs. The tax deduction for singles and heads of households who are covered by a workplace retirement account plan, such as a 401k, and contribute to a traditional IRA, the phase-out range is $66,000 to $76,000 for 2021, up from $65,000 to $75,000 in 2020. For 2021, the adjusted gross income phase-out for married couples filing jointly who are contributing to a traditional IRA begins phasing out at $105,000 and disappears at $125,000. This is up from $104,000 and $124,000 in 2020. If you contribute to an IRA but are not covered by a workplace retirement plan and are married to someone who is, the deduction is phased out if your joint income is between $198,000 and $208,000 in 2021. This is up from $196,000 and $206,000 in 2020. Here's another expert tip. You can still contribute to an IRA even if you earn too much. It's just non-deductible. Let's move on to Roth IRA phase-outs. The phase-out range for married couples filing jointly who are covered by a workplace retirement plan and contribute to a Roth IRA in 2021 will increase. For 2021, it will be $198,000 to $208,000, up from $196,000 and $206,000 in 2020. For heads of households or those filing as single, the phase out is $125,000 to $140,000, up from $124,000 to $136,000. How about other retirement plan contribution limits for 2021? Let's start with defined benefit plans. The limit on the annual contribution of a defined plan in 2021 remains the same at $230,000. What about the Savers Credit? For low and moderate income workers, the new Savers Credit, also known as the Retirement Savings Contribution Credit, the limit is actually increasing to $66,000 for married couples filing jointly, up from $65,000 in 2020. For heads of the household, the limit has increased from $48,750 to $49,500 in 2021. For singles and married couples filing separately, the limit's up from $33,000 in 2021, up $5,000 in 2020. So how can you save more for retirement in 2021? Listen, with pensions all but gone, the future of Social Security unknown, and healthcare and other costs of living expenses are increasing, it's critical that you make saving for retirement a priority, you guys. Your future self will thank you. While meeting the contribution limit for a retirement plan next year might seem like a stretch, do what you can to get as close to the maximum as possible. Remember, saving for retirement is a long-term gain, and the sooner you get started, the more powerfully your money may grow for your retirement. Every dollar you put in now will grow and help you in the future. Here's a few steps you can take to save more for retirement next year. First, meet the company match. If you have a 401k and you cannot maximize your 401k savings in 2021, at least contribute the minimum of what your company will match, because it's basically free money to you. And depending on what your company matches, it may double the amount of what you're already saving. That's a huge benefit. Number two, contribute more. No matter what retirement savings plan you have, see if you can contribute just 1% more in 2021. Doesn't matter your age, how much you earn, how close you are to retirement, every little bit helps. Even if you only save an extra $10, $15, or $50 consistently per pay period, it can make a big difference in retirement because that money will grow over time. Number three, read your 401k statements when they arrive, you guys. Knowing how to read and understand the information presented in a 401k statement may be vital to your retirement future. Look for our video, How to Read a 401k Statement. Number four, pay yourself first. We encourage you to sit down, create a budget for 2021, and see how you can contribute more to your retirement plans. Remember, if you don't invest in your future, nobody else is going to do it for you. And fifth, seek professionally managed help. Even though your 401k is employer sponsored, it does not mean your employer is making changes on your behalf. It's your account, it's your money, and it's your job to look out for your future. If you're hesitant to reach out for advice because you think your account balance isn't big enough, or you think you're too close to retirement to get help, don't let that stop you. 401k Maneuver provides professional account management to help you grow and protect your 401k. Our whole goal is to increase your account performance over time, manage downside risk to minimize losses, and reduce fees that naturally harm your account performance. There's no need for time-consuming in-person meetings and nothing new to learn. You don't have to move your account. Simply connect your account to our secure platform, and we regularly rebalance and review your account for you. If you have questions or concerns about your 401k performance, click below to book a complimentary 15-minute call with one of our folks today.